Dear class, today let us discuss the departmental accounting. This is a topic number 1 that is to be covered in the second semester, but it is a lesson number 2 after discussing learning content. Departmental accounting, this means is a system of financial accounting which is used in the organization whose all works are done through different departments or divisions or different stores. So this will end up, the purpose of this department accounting is to make an assessment of the performance of each department, each store, each divisions, and hence to enable cost control. It will enable the cost control for each department, and on top of that, it will be the decision making, whether the well-doing department may get a bonus or may demand a bonus based on the performance of their department, or for the bad-doing department may have a punishment or sanction. But again, we'll end up allocate costs to department and preparing for the department. As we have said earlier, departmentalizations can be of a 2 level within a 1 location, and sometimes it might be of a geographical area where a company has 2 or more business offices. This may be known as section, units, or sector. So the major task of department account is to accumulate the cost, maybe direct cost or income for each department, and also to share joint cost. So the costs that are incurred in common to share among the department. So concerning this direct costing, it's not a big deal because it's known what costs are being incurred by one department is associated with that department. And the direct cost can be easily traced with a specific department. But what makes a small difficult is the indirect cost. Because these are joint costs, they may be incurred to the benefit of all departments. Therefore, the distributions of this might be, they need a bit not. So a direct departmental costs such as sales income, sales return, allowance purchases, those are very easy. That they can be recorded separately for each department, but therefore they don't bring any problem. The recording of direct departmental costing can be done in 2 ways. It might be in a separate account. So each department, if it's Department A, they may be maintaining their books of account, they're maintaining their sales, they're maintaining their purchases, and so forth. Or they might be done in a means of analysis column. They have a columnar. So if separate accounts are used, then each department will have its own sales account, purchases account, and so forth. Now, if the method of analysis can be used, then there will be an instance of only sales account for both departments. Then, allocation of expenses. Allocation of expenses means to charge those expenses to a cost center or department which results solely from the existence of that cost center. For example, if indirect material is used in a department, it must be charged to the department only. And it means that the expenses which are incurred for one cost center only, the charging of these expenses to that cost center is known as allocation of those expenses. Again, we have another terminology of apportionment of expenses. So apportionment of expenses means to charge department a fair share of overhead. So that is to mean that the costs that are common, they have a benefit to all departments. And we need a cost driver that is closely related, that may be used to charge those departments with their fair value. The expenses which are incurred for the organization as a whole must be charged in various cost center or department of that organization. So let us assume there are 4 departments of an enterprise, and we pay rent. Rent are paid monthly for the whole enterprise. So this rent is benefit for all 4 departments. So it must be shared between departments of this enterprise. So this process of sharing rent among 4 departments is what is known as apportionment of expenses. So we are using a different apportionment basis for various overheads. For instance, the rent, rates, heat and the light, insurance, premises, normally we are using an area occupied by each department. But again, if we have a depreciation of a plant machinery that is a common item, therefore we are using a carrying value, that is the value of those assets of plant and machineries. But again, if we have a number of employees, may be used to divide the common costs like expenses on personal office, canteen, maybe a supervision cost, the welfare of staff. But sometimes we may use the technical estimate for maybe on consumptions of power consumption, electricity, water usage, etc. Again, we may use package costing, material handling expense. We may use a weight of material to divide the cost of package cost, material handling expenses. But again, even a sales revenue can be used to distribute the selling and distribution expenses or advertisement cost. Number of radiations may be used on distributing heating cost, or labor hour or machine hour may be used to apportion the general expenses item, etc. Or direct wages may be used to apportion staff. And in a departmental, it might be interdepartmental transfer. And this transfer means that the purchase made by one department may subsequently sold it to another department, sold by another department. So in such case, we have to debit account whom goods or services are given, and they credit that department whom provides such goods to another department. So again, let us use this example to show you how we can deal with this common, we can deal with these expenses that are shared by all departments. For instance, if we have 4 departments, and this department incur some common, if we say common, these costs have a benefit for all departments. For instance, this organization XYZ, manufacturing firm, it has 4 departments, but expenses incurred are such as rent 80 million, repair in the plant machinery 50 million, depreciation to plant and machinery 40 million, light and the heating 20 million, repair to building 30 million, supervision 60 million. But again, we have a clue. This clue, it helps us only to share those rent among those 4 departments. So the information that we have is the area square meter. So Department W, we have 1,500 square meter area. Department X, we have a 1,200 square meter. Department Y, 800, and Department Z, we have 500. But again, we have information on the number of employees. Department W, 35, X, 25, Y, 25, and Z, 15. So the value of plant also, we have those information. So this information that we have in RTB, they help us only to share. They are used to share these overhead costs. These costs are not known which department incur how much, and therefore we are using some information that might be relevant. So how do you know that to share rent, which information really is close to rent? So that is a case of common sense. I don't think that if you share rent, you may use a number of employees. That would be very strange. To share rent, that's why we have said earlier that we're normally using the area the bigger the area, square meter you own, the higher the rent would be apportioned to you. That is very relevant. Repair to plant, again, you cannot use area square meter, because if it is a repair to plant, what we are making a repair is the value of that plant. So the higher the value of the plant, the higher it is appropriate that you should use that. You should take a much higher of the cost of repair. Even the depreciation of a plant, likewise, if you have a value of plant, for instance, organization Z, they don't have a plant. So it will be strange to distribute depreciation to that department. They will say, no, you know that we don't have a plant, and therefore the depreciations and repair to plant, we are less concerned with them. That's very right. So let's use statement of apportionment of these expenses. So in the first column, we have those expenses, that rent, repair to plant. And the basis of apportionment, we have rent, we will use area in square meters. And the base for the total basis of area square meter that possessed by department W, X, Y, Z, it is a 4,000 square meter. So the total expenses is 80 million. So to distribute that, we take area owned by, occupied by department W, which is a 1,500 of a total area, that is 4,000 times 80 million. So the department A will get its share with 30 million. Department X will take a 1,200 over 4,000 times 80 million, so we get a 24 million. We will do it for department Y and the Z. And again, coming to repair and the plant and the machinery. So the total expenses to be distributed is 50 million. But 50 million, the basis of apportionment, this 50 million will be the value of plant. And the total value of plant, we have 1 million with department W, X, the Y. Department Z do not possess any plant, and therefore there are no distribution that will go to department Z. So therefore, to distribute this 50 million, we take a value of plant in the department W divided by a total jumla plant values of total values, which is 1 billion times 50 million. And again, for the department X, it will be the value of the plant in that particular department is 300 million divided by the total value of plant times 50 million total expenses. Again, we do some in a depreciation of a plant, which we have 40 million, and this 40 million to distribute it is very easy. That we take a value of the plant as our base. So we take a value of plant of department W, which is 500 million divided by 1 billion times 40 million. So we get 20 million. So again, for the department X, we take a value of plant 300 million over 1 billion times 40 million. Light and heat, we are using area in a square meter. So area in a square meter for department W is the 1,500, total is the 400 square meter times 20. So we do so in concerning department X and the Y and the even Z. Z is the 500 divided by 400 times 20 million. So repair to building, we use also area in a square meter. And you can see supervision, we are using a number of employees. So supervision, we have a total expenses of 60 million. So 60 million will be divided according to number of employees. So number of employees are 35 on a department W is 35 over total employee 100 times 60. So we get 21. And therefore we do so in department X, Y, and Z. Where Z we have 15 employees of 100 times 60 million. So we get 9 million. So this is how we are using different bases of apportionment to distribute. So these bases that decide here to distribute those costs, which is commonly shared between different departments to a respective department. So this one, I've just shown you how to distribute those common, because it's a part of challenging. But the other part is very easy. And let us discuss the final one. So assume that we have from the following list of balances, you are required to prepare departmental statement of profit or loss for the year ending 31st March 2024, irrespective of the business carry on under the name of Jackie's Superstore. We have rent and the business rate is given there, delivery expenses given in the total, commission given in the total, insurance 1,800 given in the total. So the purchases is given under each department. Department A, B, and C. Discount received is a single item, and the salary and the wages given 91 as a single item. The advertising single item 2,307. Sales have been given for each department. Depreciation is one item. And the opening inventory is given for the different department. Administration and the general expenses given as a single item. Closing inventory also is given as a separate item per each department. So from there, except as follows, there is an additional information. Expenses had to be apportioned equally between the department, except the one mentioned below. that delivery expenses, we can see it in a row number 2, column row number 2, is to be proportional to sales. So these delivery expenses has to be a proportion basing on a sales value. So the sales value, you can see they have a different sale with a different department. A have 180,000. So we will use a sales value as a base to apportion the delivery expenses. But again, a commission, it will be 2.5% of sales. So delivery expenses also, commission is the 2.5% of sales. So the commission, as you can see earlier, you can see in row number 3, which is the 10,000, will be a percentage of sales. So if department A, the department with the higher sales will take a high proportion as compared to the listed sales. Again, salary and the wages, insurance, we have a specific proportion is given. That for salary and the wages and the insurance, let us use a proportional given that A will have 3, B 2, and the C 1. But again, a discount received will be a 1% of purchases. So it will be 1% of purchases. So by using those informations, we can prepare the income departmental statement of profit or loss. So the preparation of a statement of profit or loss is the same, except the part of distributing those shared cost. For instance, sales is given, you take it as they are. Department A, B, C, and D. The total, which signify the Jack Superstore, the Superstore. This will be for total organizations. It will be 4,000. So we make a sales department A, B, C. So this is a total sales of 400,000. But again, we make a calculation as the same. We less cost of goods sold. So cost of goods sold, we are taking opening inventory for each department. We add purchases, that is the given in our equation for each department. So therefore, we end up with the goods for sale, goods available for sale for each department, as well as the total one. So then we less closing stock, which is given in the questions for each department, and then therefore we have a cost of sales. Cost of sales, cost of goods sold is obtained for goods available for sale if we deduct closing stock. So we get a cost of goods sold. Department A will be 104,810. If we take goods available for sale, which is 128,400 minus closing stock 23,590. So this gives us a cost of goods sold. So to get a gross profit, we take sales, which is sales, gross profit, sales, which is 1, denoted by 1, minus cost of goods sold, which is denoted by 2. So if you take those, you get that for each department, Department A has a gross profit of 75,190, Department B 50, 750, Department C 20, 240. And this gives us a total of 146, 180. But again, operating expenses. We have some operational expenses that we have been told that should be shared equally, except those that are mentioned there. So those which are not mentioned underneath of the questions are to be shared equally. So rent and the business rate, it is 9, total is a 9,300, is to be shared equally. So you divide by 3, you get each department will have 3,100. Advertising also equally, it is a 2,307. Now if you divide equally, you get 769. Depreciation equally, it is 4,200. Divided equally, it's 1,400 for each. Administrative and general expenses equally, it is 19,800. If you divide equally, it's 6,600. And the insurance, we're being told that we use a specific rate, 3, 2, 2, 1. So for Department A, it will become 3/6 times total, which is 1,800. So you get 900. For Department B, 2/6 times 1,800. So this is how you go for even Department C to be 1/6. So we do it for salary. Salary total we have been given 91,200, but we have been told that we use a specific rate 321. So for Department A, we are using 3/6 of total, which is 6 times 91,200. So we get 45,600, and the Department B 3,400, etc. But delivery expenses, we are using sales value. So in distributing these 3,600, we are using a sales value. So the total sales value can be shown as a column, row number 1. Sales value is the row number 1, and the total sales is the 400. So if you want to delivery expenses that have to be shared basing on the sales value, so we take department sales value of Department A, which is 180,000 over total sales 400 times delivery expenses, the total delivery expenses, the 3,600. So how we arrive with the 1,620. But for Department B also, we take a sales value of Department B, which is 138%. 138,000 over 400, which is the total sales, times delivery expenses, which is 3,600. So for Department B, we'll have a share of 1,242. Likewise, you do it for Department C. But the commission, we have been told that this is only a 2.5% of sales. So if you take a 2.5%, the total commission is 10,000, but a 2.5% of sales of Department A is 1. If you took a 2.5% of 180,000, you will get 4,500. Again, if you took a 2.5% times a sales value of a Department B is 1,038. So you get the value of here, that is 3,450. Again, if you take 2.5% of sales in the Department C, then you get 2,050,000. Discount received is a 1% of the purchases. So if you have a value for purchases for each department, we took 1%. So the 1% of 101,300, you get 1,013. And if you take 1% or 138 purchases of 81 to 100, you get 812. So this one we do also for Department C. Discount received is 1% purchases. So 1% of the purchases, and the purchases in Department C is 62,900. So 62,900 will be 629. So again, if you take operating expenses, total operating expenses, we denote it as number 4. So if you add, you get 65,502 for Department A, 48,373 for Department B, 30,786 for Department C. So again, this gives you a value of total value of 144,661. So again, to get a net profit, we take up 3, which is a gross profit, less 4, which is operating expenses. So we get a net profit or net loss. So if you took a Department A is 75,190. 75,190 minus 65,542. So you get a net profit of 9,688. But Department B also we get a positive, which is a 2,377. But Department C we get a loss of 10,546. They have a gross profit of 20, but operating expenses much higher. So therefore, in generally, we have 1,000 gross net profit of 1,590. So you see that this helps us to know the performance of each department, and the department which are doing good and the department which are doing bad. Thank you very much.